financial analysis of the companies is based on our historical business-like investing methodology. The fund benefits from two independent labels, LuxFlac in Luxembourg and Label ISR in France, and is classified Article 9 under the SFDR regulation. Before we begin, a few words about Banque de Luxembourg Investments. BLI is the asset management company of Banque de Luxembourg. We manage around 16 billion euros through four main asset classes: equities, bonds, diversified management, and funds of funds. Our investment approach is based on active, conviction-based, and long-term management. You can ask questions during the presentation using the question and answer system of WebEx. We will answer them at the end of the webinar. A summary of the conference will be made available in the next few days in English as well as in French, alongside with the video replay. And now I leave the floor to Annick, who has succeeded in reconnecting. Annick, please go ahead.
Yes, apologies. I had some technical difficulties. Could you pass me the sharing, please?
Yes.
Okay.
There you go.
So maybe just to verify, can you all hear me and see the presentation?
Yes, we do.
Okay, perfect. Apologies. And good morning, everyone. And thank you for joining the BL Sustainable Horizon Fund update. As it is the first one that I will be doing myself, I thought it would be useful to kind of go back a little bit on the investment process and really the ESG thinking behind the fund and how do we integrate sustainability into every step of our decision making. So maybe as a first slide, I think this one is quite dense, but also quite useful in a sense that it kind of takes the big picture and the greater ideas. So as you know, the BL Sustainable Horizon Fund is BLI's flagship equity SRI fund. So for us, really, the three key points that we like to put forward and that we would like people to have in mind is that for us, sustainability, and specifically for this fund, is not a new trend or a new train that we would have jumped onto. It's really having 15 years of experience in SRI investments. And that really has allowed us to kind of develop and redevelop kind of our investment approach when it comes to sustainable investments. And that has now led to the fund having this kind of unique dual approach whereby the fund is split into two separate pockets that we'll talk about in detail in today's presentation. And then also what it has allowed us is that this approach is really quite thoughtful and then also recognized by third parties. So the fund has for several years now had several ESG labels. And really it is the idea of having sustainability be integrated at every step of the investment process. So you can see that it is a multi-layered investment methodology, and really sustainability comes in at all stages of the investment decision. So really from pre-investment stage, but also once the entities are within the portfolio, kind of the post-investment options that we have, such as engagement and voting, and then also following the ESG performance of the fund. And then lastly, on the top is really, so what is the resulting fund that we come out with? As I've said, it is a global equity fund with no restrictions in terms of geography or sectors. And we end up with a relatively concentrated fund that is nonetheless still very diversified in terms of geographies and sectors. So we will find ourselves with a slight European bias, which can in part be explained by the fact that indeed European companies have been reporting on their extra financial performance for much longer, and thus benefit oftentimes from somewhat higher ESG ratings. Also, what we see a lot of times with these SRI and really focused sustainability funds is that they have quite pronounced sectoral biases. So that might be in healthcare, technology, but also banks or insurance companies. And it is something that for the BL Sustainable Horizon Fund is definitely less pronounced, as we also have quite a few consumer staples companies, for example. And lastly, it is really about being multi-thematic. So it's not a fund just for the environment or just based on water management, for example, or other funds that we see are based on health and well-being, or maybe the silver economy, but it's really multi-thematic around all the sustainable development goals. And then what I would like to bring your attention to is really our plan of action and how are we approaching sustainability. So in the past, it was really about kind of defining this ESG integration method for the fund. What does ESG mean for the fund, and how do we apply it concretely every day in real life? And now we're coming into a phase where really we're able to kind of rebalance and bring more dynamic back into the fund. So what we're looking to do here is really give more weight to these impact investments. So really what is within the thematic pocket, kind of having these investments take the center stage and be the main part of the fund going forward. So already today, the thematic pocket is roughly 28%. And that has really grown dramatically since the beginning of 2020, where we were below 5%. So it's quite a drastic increase. And we're looking now going forward to really add companies in this segment, give it more weight, and then also be able to kind of invest in these more new and emerging impact themes that we're seeing coming along, such as plant-based nutrition, or may it be green hydrogen. So kind of keeping those opportunities in mind and to kind of be at the forefront when investing to really grow the impact part of the fund. So indeed, this is a slide that kind of summarizes this dual approach and what do we mean by this dual approach. And it is really this split into two kind of separate pockets that are very complementary from a financial and extra financial point of view. So a fund needs to be a whole, and what we, as I've said, we're looking to kind of go more into this impact and the sustainable development goals idea of the fund. But historically, what we have seen and why does this quant pocket exist was really that oftentimes these impact investments, while being obviously very good from a sustainability point of view, they tend to be smaller companies active in a niche sector, and as such could potentially experience higher volatility. And also with investors looking over the last few years to invest more and more in these kind of companies, valuations have become quite stretched. And that is why the quant pocket was kind of introduced next to these thematic investments to bring somewhat of a more stabilizing role and to have a more balanced risk return profile to the fund. So here we looked rather at more large cap companies, but that have very good ESG ratings. So they are still kind of really inherently looking at their own operations and trying to be as sustainable as can be, whilst also, thanks to their size and influence, just being able to really shift market practices. We also need these bigger companies really to pave the way and kind of bring their own supply chain and their own customers on the way of making society as a whole more sustainable. And so that was really the idea when the fund was relaunched, or in 2018, when this approach came to be, kind of what was the idea behind having two pockets that would harmoniously kind of work together to create a more balanced risk return profile. And all of this is to say that, yes, obviously we have financial objectives, which is to create a positive return, but we also have this sustainability objective. And for this fund specifically, these two objectives are really on the same footing and kind of intertwined and interlinked. So for sustainability and the sustainable performance of the fund really is front and center. And so we've got measurable objectives, both in terms of environmental, social, and governance criteria that we follow monthly and that we report on, in order to ensure that the companies that are part of the fund actually contribute positively to the realization, for example, of the Sustainable Development Goals, and also reduce climate change, have good working conditions. The companies need to respect human rights. And so these are really criteria that we look at when investing and that we follow closely to ensure that we're meeting our objectives. So if we just want to come back a little bit on the investment process. So really, we start off with a quite vast universe. So the global equity market, which has around 3,000 values. And then in step, what we do and what is quite market practice is we exclude companies that would be active in more controversial activities. So here we have an exclusion policy that applies at BLI level. Apologies. So all our funds are subject to this exclusion policy. Apologies. And then the fund goes more specifically into apply different exclusions on top of this. So 5% of revenues, for example, derived from tobacco, genetically modified organisms, gambling, alcohol, weapons, and fossil fuels are in addition excluded for this specific fund. Then comes the kind of split within the two pockets. So where we're really looking, so what companies have sustainability at their heart in terms of contributing to the realization of the Sustainable Development Goals. So these would be companies that are part of the thematic pocket, or rather, are we having companies that have very good ESG ratings that could potentially be large cap companies that have this enabling quality? And we'll have several examples on the slide going forward. And then all companies, nonetheless, will have to respect our business-like investing philosophy. So you will all be quite familiar, I think, with our investment approach, whereby we look for quality companies that are able to generate high free cash flows, that have high returns on invested capital, high margins, and very strong competitive advantages. So these advantages, they can come from, for example, customer captivity, or having a specific know-how in a technology, but also cost advantages, for example, or having a strong network. And then for the BL Sustainable Horizon Fund, kind of a company's way of approaching sustainability in its operations and throughout its whole value chain can become a sustain, or like a solid competitive advantage in itself. And what we prepare for all the companies in the portfolio is kind of this proprietary evaluation of the sustainability performance of the company, which we, you can see one of the kind of summary pages that we have, where we really look at, say, what is the business model of a company? What is the positive contribution? So why is it important, and why should we care about this business from a sustainability perspective? And what is the approach that the company is taking on an environmental, social, and governance aspect? And then we end up with our fund, so roughly 35 values today on which we can measure our ESG performance, as you can see. So we track the board composition as well as emissions intensity. But to kind of give more life to what is the quantitative pocket, so we've said that it's geared toward large caps, but that have this enabling quality to them. And what do we mean by enabling? So these are really companies that, for example, in the environmental sense, are able to allow their own clients to operate and have products be more energy efficient and manage energy better. On the social side, oftentimes companies we find in this category are part of the healthcare sector or pharmaceuticals, because it's really them bringing medication and life-saving treatments to people. So it's really about access to healthcare. Oh, apologies, I've got a sore throat today. And then lastly, in terms of governance, we have companies that will help management and executives really to provide data and software that will help them to make decisions with sustainability in mind. So for SAP, for example, they really allow their clients to collect data and then to take actionable decisions based on the data that they have collected. So it's really about knowing your footprint, and once you know it, you can take actions in order to reduce your resource consumption, for example. And the second kind of part to this pocket of the fund is really these essential products. So these are products that we all use and we have all kind of got at home somewhere from brands, but we're still looking for companies that have kind of a standout effect. So for example, Danone, it is the company with the highest revenues in consumer staples coming from B Corp certified entities, and it also has one of the highest percentages of healthy products within its portfolio. L'Oreal, for example, on the other hand, is quite focused on its own operations and being as sustainable as possible, having, for example, climate targets in place to be aligned with 1.5 degrees, also reducing packaging, plastic packaging wherever possible, and treating their employees very well. So all these companies have kind of a sustainability edge still over their competitors, whereby we can say that sustainability can be a competitive advantage in itself. And then in terms of the thematic pocket, indeed, we've said that it is based around the Sustainable Development Goals. So oftentimes we find more small and mid-cap companies that are active in a niche sector. And here the positive impact should be quite easy to be explained. So we've taken the 17 goals and regrouped them into kind of 6 more digestible ideas. And for example, you can see for climate stability, we have a railway company, and indeed it is much more efficient and much more clean to transport a lot of goods via rail rather than using trucks, and emissions are less. And also Canadian National Railway, for example, uses much less fuel than the rest of its industry. So being more fuel efficient indeed brings a positive impact in terms of climate stability. Other companies, so related to health and well-being, again, a lot of pharmaceuticals and healthcare companies. Oh, apologies. So Sonova providing hearing aids, for example, or CSL, which is a plasma collection company that also provides medicines for plasma deficient patients. Then one of the big themes we're looking at is also buildings, and because we know that buildings are quite energy intensive and consume a lot of energy and resources, and also heavy emitters of emissions. So here we're looking at companies from the design and kind of early stages pre-construction such as Sweco, all the way to companies waterproofing, the roofs and the facades, but also NIBE, for example, a Swedish producer of heat pumps. So it's really looking at buildings from every angle and how can we have a positive impact with the companies that we invest in terms of having buildings be greener and more efficient. So we've briefly talked about the quant pocket and how do we see this idea of enablers. So Air Liquide for us is a prime example of an enabler of the transition and technological progress. So when we think about Air Liquide, oftentimes what comes to mind is these quite polluting industrial sites and trucks, but also the gases, for example, that Air Liquide produces. They're very useful in terms of our everyday life. So our flat screens depend on these gases, solar panels do depend on these gases. So it's really a company that is able to upgrade infrastructure and to retrofit even industries that are historically considered to be less sustainable and quite polluting. So for example, the gases help to reduce the sulfur content in fuels, which is quite helpful to refining customers, but they also allow us, as we've said, to make these advances in mobility and connectivity, which is quite important for their electro customers. And then, as we've said, what we look at is also companies to be quite mindful of their own footprint. And here, Air Liquide is looking to heavily reduce its own emissions by taking actions such as increasing the portion of green and renewable electricity in its own operations, or other activities include the reduction of the footprint from the bottle and the work business, really. So, and lastly, what Air Liquide is doing, and where we're kind of hoping for the future to go, is also to be this catalyst for the hydrogen ecosystem. So they're expecting to triple their revenue within the next 10 years to about 6 billion coming from this business line. And so it's really this forward-looking kind of enabling quality of the company that makes it have its position in the fund. And in order to have some examples, we've briefly talked about it, about the impact drivers of the thematic pocket. As we've said, moving goods by rail is less polluting, and also then Canadian National Railway in specific being able to consume 15% less fuel than the industry average really shows that this is an advantage for the company and a positive impact on climate stability. As we've said, Sonova providing hearing aids for people to really live their life to the fullest, and also they're looking to more and more also go to emerging markets and to more rural populations in order to help them to have access to these to healthcare and to hearing aids in order to benefit from an improved quality of life as well. Then in terms of basic needs, we've not spoken about. So here we have companies, bioscience companies that really look to the production of enzymes in order to have crops grow better, and then also be able to kind of increase the harvest and have our foods be more reliable, and also increase safety and longevity really of products. So we will have less waste thanks to the enzymes within our food products. And so clearly here again, impact on zero hunger, but also the reduction of waste. And if we want to have a look at the portfolio, so in terms of the top 10, as we've mentioned in the beginning of the presentation, at the moment it's still quite focused on the quant pocket, but more and more with the new additions that we're making, we're trying to bring this thematic and this more impact character of the fund also to the top 10 holdings. So what we've the changes that have been made already year to date were the addition of CSL, so an Australian biotech firm based on the plasma collection and plasma therapies. Then we've also invested in advanced drainage systems, which is an American active in water management from A to Z. So they provide the sewage piping systems, but also water tanks and septic tanks around, really being able to provide services around the full cycle of water. Then we have NIBE, the Swedish heat pump producer, as we've mentioned previously, in terms of very important in terms of building efficiency. And we've also added L'Oreal, which was really, in a sense, to us, a company. For example, if you compare it with Home Depot, which has exited the portfolio to have better ESG credentials and really looking at reducing emissions and reducing packaging. And then indeed, Home Depot has exited the portfolio after the good run post-pandemic, where loads of people have been spending more time at home, had the budget available as well to renovate their homes. So we felt like this was a good time to invest in alternatives and take some profits from the outstanding performance of Home Depot. We've briefly touched on the regional allocation, whereby we've said there is this bias towards European companies, which in part comes from the fact that these companies have more experience in terms of sustainable reporting and thus also benefit from higher ESG ratings. You can see we're clearly underweight compared to the index in terms of the US exposure. In terms of sectors, as we've said, more diversified probably than several other SRI funds, with still a heavy focus on consumer staples and industrials. We can say that the candidates we're finding in terms of impact are a lot. Obviously, if you look at the SDGs and the split we've done in terms of, so we find candidates in the industrial sector, but also, healthcare and materials and information technology, in terms of, thinking about these enabling characteristics. And then lastly, market cap, it is still quite a tilt, let's say, towards more large cap companies, but more and more what we're introducing are these small and mid caps to provide really this impact and thematic aspect that we're looking to portray with the fund, really. To touch a few words on performance, so the 5 contributors year to date have been Canadian National Railway and then several healthcare companies such as Sonova and Novo Nordisk, but also the Japanese firm Seicon and Air Liquide. On the bottom, last week several good news came out, so this might look different already this week, but the consumer staples, especially SCT and Kimberly-Clark, had quite a difficult start to the year, being quite energy intensive, obviously, with the invasion of Ukraine and energy prices rising. These companies had suffered, and especially their margins. But last week, the news came out that indeed they're able to pass on some of the price increases to their own customers, and say that margins will be able to recover. And then SAP was also among the bottom contributors. And then compared to the benchmark and reference index, we can see that the fund has really historically focused on having a lower volatility, which has come at the expense of somewhat a lower performance. But the idea clearly is to move away from this hyper focus, let's say, on low vol, and kind of do take the opportunities, as we've said, in that more thematic impact theme, and as such also to benefit from higher performance. And that is it from my side. So happy to take any questions.
Thank you, Annick. Thank you very much. At the moment, we do not have any questions. If you have any questions, please do not hesitate to ask them directly through the Q&A system. So Annick will be able to answer them directly. Nevertheless, if you have any questions coming to your mind after the webinar, you can always contact your sales representative. They will be able to forward your questions to us, and we will answer them as soon as possible. I do not see any questions coming, so I think we can close this webinar. I would like to thank you all for attending this webinar. Annick, thank you very much for this clear explanation of the strategy. It was very interesting, I think. As I said, we will have replay as well as summary available in the coming days, and we will be happy to send it to you when available. Thank you all. Have a nice week, and yeah, goodbye.
Thank you. Bye.
Thank you. Bye.